Hello, it's ChewDog Charts. Now, back in March, I read an article from TheStreet.com titled 4 Stocks Under $10 Setting Up to Break Out. Now, it's been several months since then, and I want to go back and do a checkup. Reading from the article, it states that there isn't a day that goes by on Wall Street when certain stocks trading for under $10 a share don't experience massive spikes higher. Traders savvy enough to follow the low-priced names and trade them with discipline are banking ridiculous coin on a regular basis. When I, the trader from Street.com, trade under $10 stocks, I do it almost entirely based off the charts and technical analysis. I also like to find under $10 stocks with a catalyst, but that's secondary to the chart and volume patterns. So with that in mind, let's go ahead and take a look at the 4 stocks under $10 per share that was recommended by TheStreet.com, again back in March of 2017. Okay, the first stock from Roberto is Opko Health, symbol OPK. According to Roberto, if you take a look at the chart for OPK, you'll notice that the stock is starting to trend back above its 20-day moving average of $8.17 a share. The trend back above its 20-day is on top of a recent uptrend that has taken the stock from its new 52-week low of $7.13 to its recent high of $8.54. That uptrend is now starting to push shares of Opko within range of triggering a near-term breakout trade. Now, if you take a look at the chart here, Roberto's got set up these blue lines, clearly showing the uptrend, and also the pop above the 20-day moving average. Now, Roberto goes on to say that traders should now look for long biased trades of Opko if it manages to break out above its 50-day moving average of $8.50 to $8.54, and then above more resistance at $8.92 with strong volume. Look for a sustained move above those levels with volume that is hit near or above its 3-month average of 5.15 million shares. If that breakout hits soon, then this stock will set up to retest or possibly take out its next resistant levels at $9.45 to its 200-day at $9.66 a share. All right, let's take a look at my chart. So we're looking at my chart on Opko Health, which goes back to 2007, mid-2007, all the way up here to December 2017, and reminding you that I do have the advantage that it's December, and this article was written back in March. But according to Street.com, they were looking at this stock back in this time frame here, roughly, when it bounced off of $8 a share, and probably was right here in this area. Now, if you move on down into the MACD, you can see that the stock attempted to bottom here and move up and through the trigger line, but it was reflected back. So by the time we get to early 2017, it was clearly in a reflection and still heading down with no real sign that it was going to attempt another move through the trigger line or any bottoming, with the exception that here in the histogram we can see that it did make a move here but was then reflected back down here. We now are making a slight move with another slight reflection. So in my opinion, we still have a ways to go, but we're closing in on a possibility. But certainly back in early 2017, I would not have called that a stock that I'd want to take a look at buying at that time. We can just watch this one. Here, the momentum is still in a downward trend. We do have the bounce off of the -5, but I don't think yet we're going to move up to the 0 line. We still have some more improvement in some of the oscillators. Here, the price rate of change also just shows the downtrend after this attempt Now this did move through the fast line, or the fast line did move through the slow line, but it came back down again here. And certainly by early 2017, you still would not have had any sign that this is something that you want to buy into. The relative strength also shows us continued weakness here, and then in the stochastic, also weakness in early 2017, and an attempt here at a bottom. The volume has moved up. That's not much of a sign, at least to me. And in the Williams, we did hit a bottom here, but this was after March 2017. And we have an attempt here with the move up for some improvement. But overall, this is not a stock that at that point in time that I would have looked at as something possible to trade or invest in. We still are down here at $5.25, and I think we have a little bit of sideways trading to go before I'd take another look at it. All right, let's go to the next stock. Now, the next stock from thestreet.com is RentACenter. Symbol is RCII. And according to their article, if you take a look at the chart for RentACenter, you'll notice that the stock has been uptrending over the last 2 months, with shares moving higher off its low of $7.76 to its recent high of $9.62. During that uptrend, shares of RentACenter have been making mostly higher lows and higher highs, which is a bullish technical price action. That move has now pushed the stock within range of triggering a big breakout trade. They continue. Traders should now look for the long bias trade in RentACenter if it manages to break out above some near-term resistance at $9.62 to $10 with high volume. Look for sustained trend above these levels with volume that hits near or above its 3-month average of 2.05 million shares. If that breakout develops soon, then the stock will set up to make a run at $10.50 to its 200-day moving average of $11.10 or even $12 a share. And as you can see here by this chart, the blue lines are set up at this point here with this uptrend. So now let's take a look at my chart. So this is my chart on RentACenter, again the 20-year monthly. And some of the differences between my chart and the Street.com chart is I'm using a monthly chart, which is a longer term perspective. I think that is much more favorable to the shorter terms. And only once you identify a stock that you really want to take a look at closer, do you then move into, say, the weekly or the daily charts on this. But for our purposes, and when I'm taking an initial look at any stock, I simply go to the monthly. If the monthly's not in good shape, then forget about it. Move on. Based on my chart here, it looks like the price did bounce off here in early 2017, where the Street.com was looking at it. And it came here and bounced off of the 20 EMA and reflected back down with a higher low, which is favorable. So by this chart here, it's looking encouraging. Moving down to the MACD, and we can see that the maximum negativity here was in, say, mid-2016, and then a nice upward trend. We've crossed through the slow line, the trigger line, and looks like we have some acceleration. Again, that's a favorable condition. The histogram clearly shows a move up, but we do see here that we have a little bit of a potential top in the histogram. Moving through, the momentum indicator has moved from early 2016 up through, and we're at the zero line, which is favorable in my opinion. Price rate of change has also moved up from early 2016, and we may be at a temporary peak at this point simply because it's starting to turn and curve over. We're still under the zero line. Moving down into the relative strength, we have a clear upward trend, which is also favorable. The stochastic also confirms the other oscillators with the volume increasing, and then into the Williams, a good uptrend from 2016 on up here. So back up to the price chart. It looks like there is the resistance at the 20 EMA. I'd like to see that move above. However, this stock has done a lot to repair itself. It just hasn't shown up in the price yet. So I think there's good possibilities with RentACenter. I'd want to do more fundamental analysis on this before I bought into it. However, I think that TheStreet.com was correct in their reading on this stock that there is some possibility to it. So let's go ahead and take a look at the next stock. And the next stock by TheStreet.com is Constellium, symbol CSTM. According to the article, if you take a look at the chart for CSTM, you'll notice that this stock has started to bounce modestly higher, right above some near-term support at $5.50 with a number of strong upside volume sessions. That bounce is quickly pushing the stock within range of triggering a near-term breakout trade. Traders should now look for the long bias trades in Constellium if it manages to break out above its 200-day moving average of $6.22 and then above resistance at $6.50 with high volume. Look for a sustained move above those levels with volume that hits near or above its 3-month average of 963,000 shares. If that breakout fires off soon, then this stock will set up to retest or possibly take out its next major overhead resistance level at $7.25 to its 50-day moving average of $7.30, or even its 20-day moving average of $7.54. So now if you take a look, they've got some charting here, but it's a downtrend in this blue line here, and some consolidation here at this level. So they're looking for improvements in both the price as well as in the volume. So let's go ahead and take a look at my charts. Okay, my chart on CSTM is a monthly chart going back only to, say, early 2013. It looks like that's about the extent of the history, at least for me. And looking at the chart, we bottomed here in late 2015, maybe 2016, and then a slight uptrend. And we've moved above the 20 EMA. TheStreet.com was looking at it someplace in this time frame here, and so I think it moved up based on what they had expectations of. Moving here to the MACD, we show that the MACD crossed over the trigger line here in mid-2016 and then has been moving up steadily since then. The histogram shows pretty much the same, the momentum indicator as well, and then the price rate of change. At that time in early 2017, it looked fine. Here we see that the fast line has moved here just below the slow line, giving us a signal that the trend may be changing. The relative strength gave us that signal earlier that things were changing when it hit a peak here, moved down, and then the subsequent peak was a lower low. That would have told us that things are changing, and that also is confirmed by the stochastic. It's rolled over and moved through the fast line has moved through the slow line. Volume, not much to say with that. And then the Williams also giving us an indication that things have changed back here. However, back in early 2017, it was bouncing off at this point here, so that would confirm what TheStreet.com was looking at. Going back here to the price chart, it looked like a fairly good trade at this level here, and now it's looking a little bit questionable. However, it may stay above the 20 EMA. We'd have to look into that further. This would be a stock that I wouldn't be interested in, but if you were, then please conduct further fundamental analysis on it. All right, let's go to the last stock. And this last chart from thestreet.com is Southwestern Energy. Symbol is SWN. According to the article, if you take a look at the chart for Southwestern Energy, you'll notice that the stock recently formed a double bottom chart pattern after shares found some buying interest at $7.20 to $7.22 over the last few weeks. And again, last few weeks was in, say, mid-March. Following that potential bottom, the stock has now started to spike higher and move within range of triggering a near-term breakout trade. Traders should now look for long-term bias trades in Southwestern Energy if it manages to break out above its 20-day moving average of $7.84 and then above more key resistance levels at $7.88 to $8.05 and over $8.20 with volume that register near or above its 3-month average of 14.85 million shares. If that breakout hits soon, then this stock will set up to make a run at its 50-day moving average of $8.83 to $9.15 or even $9.75 to $10 a share. And as we can see here, we have this blue line moving at this point here, and then the double bottom here and here. So let's go ahead and take a look at my chart. All right, my chart here on Southwestern Energy is a 20-year monthly chart. We can see here that thestreet.com was focusing at this period and saw a double bottom. I look at this chart in a longer time frame and I also see a double bottom, but it's different. The first bottom I see here is in 2015, 2016. What is also interesting is I see a W formation. If you read Investors Business Daily, they often talk about a W formation, and this one is beginning. And here we see the left side of the W with the move back up here and then back down to the double bottom, and then hopefully at some point in time we'll move up for the right side of the W. So a good setup, at least thus far. Moving into the MACD, I see the maximum negativity at this point here, and then the second bottom was here. And what's good about this is the fast line is riding above the slow line on that second bottom. I think that's a favorable condition. The histogram shows much the same. We were in positive territory above zero on that second bottom, which occurred here. Into the momentum, much the same. The second bottom is below the zero line, however, well above the previous bottom. So improving conditions, same that we see here, improving conditions in their price rate of change with a good upward movement. And then the second bottom here, well above the first. Moving into the RSI, much the same. And the stochastic as well. We're trending sideways a little bit here, but I think very soon there's going to be an attempt and a successful attempt of the fast line to move through the slow line and then hopefully upward movement from there. Volume looks good, all in an upward direction. And down into the Williams. The Williams, again, reflecting much the same as the other oscillators. So back up into the price chart on Southwestern Energy. Everything looks relatively favorable in my opinion. This would be something that I'd want to take a look at. However, before I made any decisions on purchasing, I'd want to conduct a full analysis fundamentally. But overall, the charts look good and the oscillators look good, so this is something that I would perhaps want to move forward on. However, at this time, I do not have any long or short positions in Southwest Energy or any other stocks that we've discussed today. So for now, that's ChewDog Charts. Thank you.